Hi, everybody. Welcome. Thank you for joining us. Sarah Springer here, realtor, broker, owner of Pathways Realty. Today, I am meeting again with Robert Barnett. He is local here in Tallahassee with Loan Depot. Recently, this year, I've seen a return of what are called points. And I know that points basically is a method of a buy down to lower an interest rate like at the time of your closing. Could you explain a little bit more about what points are, how they work, and how they're calculated?
Sure. So a point by definition is a percentage of the loan amount paid as a fee at closing in order to buy a specific interest rate. For example, if you are borrowing $200,000 on a mortgage and you're being charged 1 point, well, 1% of 200,000 is $2,000. And that's added on to your closing costs as a fee, as a one-time fee in order to buy the specific interest rate. So the purpose of paying points is to be able to buy that rate lower. And what we're seeing right now, specifically within the market, is the ability to pay points to buy that interest rate down is actually providing some additional benefits, and it's allowing your overall dollar to stretch a little bit farther. Whereas usually paying 1 point buys you down the interest rate about 1/4%. So if you think that you're paying 1% a fee upfront to save 1/4% in the interest rate, well, you're essentially breaking even in about 4 years. You'll save enough interest in 4 years on the loan to be able to cover the upfront cost. And for most people, if you're planning to own your home and stay in it for longer than 5 years, then it may make financial sense to do it. You just have to balance it with your out-of-pocket budget. But what we're also seeing right now is you may be able to buy down that interest rate 1/4% with maybe less than a full point. Maybe it's only 3/4 of a point or even only half a point. But when you can do that, your break-even time frame shortens, and it makes it a lot better deal, especially where we are in the market right now, where we're seeing interest rates in many instances in the low 3s and the high 2s. You may be able to get it down even a little bit more just by paying that additional point difference. So it's always a good conversation to talk with your lender about, well, if I do put more money into the transaction, should I put it towards down payment, or maybe should I put it towards points to buy the interest rate lower? Because we're in a period where we're looking at all-time lows in mortgages. There may not be any beneficial opportunity to refinance in the future, but by paying a little bit more in closing costs, you get it down just that much more.
Yeah, absolutely. I remember the last time I really saw a heavy use of points was probably right before the market crashed. I hate to say that, but and I probably will leave that out of the video tutorial, but that's the last time I really remember them being heavily used. Well, Robert, I want to thank you for this information and good news that we're seeing as things are beginning to open back up in the financial markets. Real quickly before we move on, does FHA allow you to pay points to buy down your interest rate as well?
Yes, it does. FHA, conventional, VA, USDA, all of the major loan programs out there do offer the ability for you to pay points to buy them the rate. Again, it's just important that you get an analysis of what the break-even time frame is and if it's a benefit to you.
Perfect. Thank you so much, Robert. Robert here with Loan Depot in Tallahassee. If you are interested to continue to learn more, please watch our next video. We'll be going a little bit more into depth about conventional financing, as well as a little bit of pro and con on conventional financing versus FHA financing, what are some of the differences and things that you should consider and evaluate. So Robert, thank you so much for your time. We appreciate you.
Thank you, Sarah. Always appreciate the opportunity to talk with you.